My name is Chad Lynch. I'm Director of Corporate Business Development here at Orrick. Thank you for joining us for our first Total Access panel 2014. My primary responsibility at Orrick is Total Access. We've been doing it for 7 years. We've been doing it for a year and a half in New York. I'm having more fun here than I am in Silicon Valley. I just want you to know that. It's an awesome market. I just get back here more often and get work on the weather a little bit. It's cold. A couple things. If you have anything that makes noise, please turn it off. The other way you can help us, and I know a number of people have done this, if you find this worth your time, if you'd come to our first one, I think we could have filled up maybe a third of that side of the room. So obviously people seem to think this is worth their time. So the way you can help us is by letting your friends know. If you find that worth your time, particularly entrepreneurs. We're a law firm, everybody knows that. Okay, I am not a lawyer. I ran a startup back before probably most of you were born, 96 to 2000. It was back in the .com era. Also, if you like this, we also run panels obviously in San Francisco and Silicon Valley, and they're live streamed, which for most of you will be at lunchtime. Here is when they'll get going. So you can find that on our YouTube channel or on our Total Access website. We have one next week on digital health, enterprise, wearables versus apps, and then we have a woman who runs the digital health outreach at a large hospital in San Francisco, which will be great. And the following week we have one on mobile data with 3 venture-backed companies and 2 investors. And if those things are topics that you like, you can find those. The videos will be there, but also if you want to watch them live, you can watch them live. So same thing with this. I'm going to turn over to David. He's a lawyer. But he has the best hair, doesn't he? The best hair.
You know what? That hairism is violating our diversity and inclusion policy.
Oops. So anyway, we're going to turn over. Thank you very much for coming in. We're grateful that you're here. Enjoy the discussion. We got some great investors going to tell you what they're focusing on in 2014. Have fun.
Chad, thank you very much. And thank you all for coming, as Chad said. For those of you who don't know, you're at Orrick, and Orrick's a law firm. It's a global law firm. Very focused on representing technology companies, which is why we do Total Access. And we do thank you for coming, and we would love to hear your feedback. If there are other topics that are of interest to you, please let us know. Also, tonight we'd really love to have everyone participate. So if the discussion is stimulating a particular thought and you know, we haven't taken a break, you know, just let us know. I'll try and keep my eyes open, get a chance to fit in some questions. And I'll do it sort of sua sponte during the proceedings. So look forward to a spirited discussion. We're really lucky to have a great panel of VCs here tonight. Sort of without further ado, would I guess ask folks, starting with you, Adam, to introduce yourself, tell them a little bit about your background and your fund.
Great. Is this on? Working? No. Now it's on. Pleasure to be here. Thank you for coming. My name is Adam Rothenberg. We have an early stage fund that we call BoxGroup. We're based here. Part of our bet is on this ecosystem, the super interesting companies that are coming out of here. We invest across the country. Early stage focus, sort of first money into Series A. We end up being people-driven and opportunistic more than thesis-driven, but having said that, there are themes that we think about, and I guess that's what we're going to talk about tonight.
Hey everyone, I'm Micah, partner at Founder Collective here in New York. I've got 2 of my colleagues over there on the right. I think they've had a sum total of 14 beers. Just kidding, guys. I think it's 12. Anyway, we're a small fund, seed fund built all around entrepreneurs, including our MBA associate. Everyone in the fund has built at least one company. I've built 3 companies. My most exciting one was one that I took from 0 valuation to $100 million valuation and back to 0, which was a very, and if anybody needs tips on how to do that or how not to do that, I can tell you. What we focus on in a fund is exclusively the seed stage. We're in a variety of things from robotics to BuzzFeed to Uber, so really diverse set of stuff. We've got over 150 companies in the portfolio. And like I said, generally first institutional round between $200K and about $1 million. Thanks.
Hey guys, Spencer. I don't know if I was at the last one of these, but this is my second of these events. Really enjoyed them. Thanks for having me. I'm from General Catalyst. I run the New York office for the firm. We are sort of a more traditional sort of Series A plus venture firm with 3 offices, Palo Alto, Cambridge, where we started. And I'm here now in New York as of almost a year ago. Again, focus on Series A. We also have a later stage business where we write sort of $15 to $50 million checks in businesses. And we do some seed, although that's pretty opportunistic. I focus on really mostly marketplaces, a little bit of financial services, and next generation brands. So happy to talk about our portfolio too as that comes up in the conversation.
Hi, Eliot Durbin with BOLDstart Ventures. We are a seed stage, primarily enterprise-focused fund. We're on fund number 2, and we normally invest anywhere from $250,000 to $350,000 into the first 18 months of what I call institutional runway. So that makes us a seed fund, and we follow on aggressively. Our job, my job as I see it, is to get our founders to their Series A rounds with folks like yourself. And so a couple of investments. We're one of the first investors in Indiegogo, stuff like QuizUp on the consumer side. And on the enterprise side, companies like GoInstant, Divide, and most recently a company called Truly Wireless, which is trying to reinvent the mobile PBX phone system, but only on mobile instead of the desk phone. Excited to be here. Thanks.
Hi, I'm Jordan Bettman. I'm a senior principal with Bain Capital Ventures. First and foremost, I want to thank Orrick for hosting tonight. I'm sure one of the things we'll talk about is the New York ecosystem, where it is and where it's going. None of this happens with not only just startups, but institutional players in and around the community, and that includes law firms like Orrick, so thank you. Bain Capital Ventures is the venture capital and growth equity arm of Bain Capital. We do traditional Series A opportunities, $3 to $5 million, up to $60 million of growth equity, and everything in between. And we do that out of the same pool of capital. The way we do it is 32 investment professionals. We all pick 1 or 2 key verticals, go very deep, try to be laser focused. I say that a little kiddingly because I focus on fintech and fin services, and so depending on how you define that, it's about a quarter to a third of GDP. So pretty large actually, but we do try to pick sectors. So New York office is one of our satellite offices, Palo Alto's another satellite office, and then Boston's headquarters. And again, each one of us, all the way from analyst to MD, pick 1 or 2 stages, or 1 or 2 sectors, excuse me, to focus on and remain stage agnostic. So.
Jordan, thanks, and thanks everybody. So, the panel today is about what's hot, what's not, we're going to ask each of the panelists, to during the course of the evening, talk a little bit about not necessarily what's hot or not, right? But what industries, what real specific, product, services, markets that they're investing in their funds, and ask for a little discussion around that. And I think, Jordan, that was a great, here in New York, at Orrick, I can say I personally, we're a big booster of the New York ecosystem. We were down here high-fiving when we saw that, because heard that from Jordan. So certainly any connection of any of the sectors that people think are going to be particularly relevant here in New York, we always like to call those out, I guess, with particularity, because we're a little bit, parochial from time to time. So not to pick on anybody, but Jordan.
I thought I already did my part.
Yeah, you did. You did. All right, Spencer.
Sure.
Spencer. So, what's hot for your fund now? Or what are the sectors you're looking at?
So I'll start off with what I look at, and then maybe talk a little more broadly. So my biggest personal passion is unfortunately also quite broad, and that's more of a business model than a sector, not just marketplaces. So I think it's one of the oldest business models that exists. I think that most, they're very monopolistic. They have been well executed on the internet for a variety of reasons, in their ability to facilitate global markets, their ability to make what in a local business can be a very small market become very big quickly. And so that is broadly an area that is of interest to me. As a firm, we've spent a decent amount of time over the course of the past 12 to 18 months in more local marketplaces. so my previous role in the venture world was at a place called Excel, where I did a deal called Halo, which is a transportation marketplace for cabs. And that sort of opened my eyes to, what I think about is sort of the next generation marketplace, which I call a software-powered marketplace, and that is basically a business that where the sell side really runs their entire business through the platform. So if you think about an Uber driver, a Halo driver, the platform is literally right in their face the entire day. They're not managing, posting something on Craigslist and posting something on, Etsy, this, that, or, not that you do that in transportation, but they literally run their whole business through the platform. And so that is one of the things that leads to monopoly, and it's something that makes for a really sticky product. So try to think about where those extensions can be. We're co-investors with a couple folks here, I think, in a company called Handybook, which is a New York-based local marketplace for home services, which we're really fascinated by, not only because the market is massive, but we think that any service that in which you're able to establish a relationship, a trusted relationship with someone in their home, and do that over a long period of time, should really sort of introduce new opportunities for incremental services to be delivered, whether those are products or professional services. So that's really where I spend the most of my time actively sourcing. But as anybody on this panel can attest, you only get to do about 30% maximum of what you want to do because opportunity kind of is all over. So.
Good. Eliot, what about you?
Sure. Well, seed stage, we have to be relatively first. There's usually a couple angels involved when we meet a company. So we're thematic, and we've got three key themes. First one is SaaS 2.0. If you want to know what that means, try entering your Salesforce pipeline from your iPhone. It's going to be a little difficult. And it's building from the mobile up, as opposed to, we had an entrepreneur, his company got acquired by Salesforce. And the story goes that he's sitting with one of the senior management team. He says slapping an HTML5 interface on Salesforce does not make it mobile. What does mobile mean? It means, looks like you just called so-and-so, would you like to log that in your pipeline? It's a prompt. Call it the automagically factor. Try to register the domain name, somebody beat me to it. So we have companies that are going after smart data. We think big data is past. We have a lot of data now, and we have to sort through it and find ways to make it actionable and useful. And the third one is kind of the Googleization of IT, consumerization of IT. There's a lot of names for it, but enterprises want to run their IT infrastructure kind of like Google does. They want to rapidly scale it up. They want to have it on demand, and they want to have it relatively frictionless. They want to test it out without a lot of cost. You don't want to be sold a big bundle of software anymore. You want to go and find it, be educated about it, and have it reach out and grab it and pull it in. So those three key themes are where we're looking right now. So
is that principally going to be cloud-based on the third of those, the one you were just discussing?
Principally. But what we're seeing is kind of a distributed network, very early, but there's a lot of distributed networks, and we have a company called YHAT. YHAT is a really cool company because these guys at On Deck Capital said, every time I want to take my predictive model built in R or Python and move it over and operationalize it into software, I have to go to the dev team. And that dev team really does not like it when I screw up their calendar. And it used to be a clunky process, getting your predictive model integrated into your software. Well, these guys created a nice clean REST API that allows you to just solve that problem. And if you look at the demand that they're finding in the market, it wasn't what we originally anticipated, which was cloud-based. People want it on-prem because their predictive models are proprietary. So there's beginning to be, I think, a more mixed demand, cloud-based versus on-prem, behind the firewall.
So, Micah, you guys are early stage.
Yeah.
So that obviously puts some limitations. Do you see it? So people think about the things that are, but people might say right now, oh, what's hot? Bitcoin's hot, right? Cloud everything is hot. Security's hot, right? Are there some things that you just can't pursue that, you know, that whether you think they should be hot or not, or whether you think they're going to attract financing or exits in the future? Are there some industries where you feel like, well, it's not really easy to deploy capital at the seed stage for any of those?
Porn is always hot.
Yeah, I'm just saying.
The deadly sins are the best places.
That's the thing. Is you don't need Orrick to bootstrap, because I think that makes money the minute you turn it on.
You know, I think some of the, by the way, you didn't let me get my joke in, because I was going to say the trend that we're focusing on is snowplows, but that was pretty bad. Yeah. Anyway, I think, you know, as a it's like my colleagues are like taking this down.
You had time to come up with another one.
Yeah, I didn't expect this. So we're kind of believers that opportunity can sort of come, you know, in any form or shape. In fact, my colleagues were there a couple weeks ago. My partner said, "I want to talk about driverless cars," and we're like, "Really?" It's like, "Yeah, I want to talk about driverless cars," and I actually think that's so. I think. You know, for us as seed stage investors, you know, think of a pyramid and sort of the pyramid upside down. We're kind of at that most broad layer, looking at really everything from a driverless car to a marketplace to a SaaS enterprise company. So if a compelling team and a compelling idea walk through the door, and we have conviction, we're going to invest. Having said that, I do think the pendulum swings back and forth on different categories. I think we saw that with big data. I think hardware is an example of a place that's kind of exciting and hot right now. I think e-commerce has kind of gotten cold. And does that mean we won't do an e-commerce deal? Usually what that means is the deal has to be later than it might have been a year or two ago. So for example, an e-commerce company that might have been a vision or a crude product but not really selling might have gotten funding. Whereas I think now that same company at institutional seed has to have 10 to 20K, I'm making up numbers, but you know, 10 plus thousand in sales, you know, on a monthly basis, a product that people can touch and feel. And I think as a general comment, what I'm feeling is, as a seed fund, we need to see it now. We need to see the product. The folks in a deck, you know, the team in a deck isn't generally enough to get funding. It's not always true, but you know, kind of having the product to touch and feel or play with, or whatever the case may be, it is increasingly the bar, I think, for a seed round of capital.
Adam, and when I think of like sort of what's hot, and articles have talked about, you know, what's hot lately, one thing that came out recently in the Wall Street Journal, I'm sure you saw it because it had at least one of your portfolio companies, and it was, oh, real estate SaaS. That's a big deal, and we were fortunate to be able to work together with you on that deal. Is that an area that was that an area where you had identified the industry, or you identified the team and said, hey, this is an area where we kind of like to increase our exposure? And if so, then how did you go from the top of the funnel to the bottom of the funnel where you found the team?
So, I mean, realistically, that deal was opportunistic in this. Realistically, the deal was opportunistic in the sense that a great team came through our network. Having said that, we've made a couple real estate investments before, especially on the commercial side. It's a space we feel like we know. It's a space we feel like makes a ton of sense to be built here in this ecosystem. We have a bunch of contacts where we feel like we can help. So when it comes in the door, it's much easier to say, definitely let's evaluate it, let's meet the team, happen to be a super strong team. And then I guess it gets more into the theme of sort of these deep industry products, in this case from someone that had spent time on the technology side of Microsoft and on the real estate side as a broker in Seattle at one of the big firms. And so that's sort of perfect because he understands how to build technology and actually has a developer background, but he also has this deep industry knowledge and realized, hey, this, you know, the way this operates is not right, we can do it better. And so he went ahead and built a strong team and some beautiful software, and he made it very easy for us to say yes to investing in that deal.
Are there other spaces that you think of that, as you said, you had made a couple others in that sector before? Are there other sectors that you're sort of focused on right now, saying we particularly like deals in this area?
Yeah, you know, so I guess within the construct of more traditional industry verticals that we're seeing disrupted, we've been spending time in shipping and logistics. We think it's a super interesting space, big opportunity, big market. and especially with everyone having a computer in their pocket, there's a ton you can do to connect sort of disparate sources. So in terms of industry verticals, that's one. Blowing it up larger to sort of other themes. Something we've been thinking about is just how mobile and technology combined create these really monetizable moments as they change consumer behavior. So one of those is using your phone as a remote control. So there are these purpose-built apps, Uber, Handybook, other ones where when you know you want something, you can use your phone like a remote control and you can get it. And so that wasn't possible 3 years ago, probably wasn't possible a year and a half ago, but super exciting. So I guess we're looking at that sort of generally, and that's such a broad theme that it gives a lot of opportunity.
Can I piggyback off them?
Yeah, absolutely.
So we do a lot with Adams. I talk to Adam probably every other week about deals, and when we look at mobile, I think one of the things we share is, I think, in addition to increased transactional moments, one of the things I'm most excited about, and one of the reasons why I think you hear global mobile numbers quite frequently, is just new buyers, new sellers. So like, you have a world in which 600 million people have access to e-commerce, and today, I don't know what the number is, 2 billion, 3 billion. I mean, it's the number of smartphones is absolutely exploding. And when you hear companies like Facebook talking about partnering with other organizations like Ericsson and a few others on their sort of mission to connect the rest of the 6 or 7 billion people on the planet, that's a big part of what the promise of mobile is. It's people spending, transacting, selling, monetizing their skills in ways that we're really excited about. So.
All right, so Jordan, I had to let you go last because you asked for a break.
Yeah, thank you.
Wore yourself out with your intro.
I took a lot of thinking in advance, so now I
get
this
it.
is good.
I get it.
There's only so many thoughts I can keep at once. So.
I got it. Hopefully you've had enough time to rest, and not to throw you a curveball, but you focus on fintech, and when we talk about hot or not spaces, right? Bitcoin, hot or not, true or false, right? So tell us a little bit about it. Tell us about how you think about it personally, maybe, or how institutionally you think about it.
Yeah.
Because it's got a lot of mind share, right?
So we think about this a lot, and what's so interesting about Bitcoin as a topic is, one way or another, there are very few topics that come up, probably a couple of generations, where such smart people are on such opposite ends of what this is and what it can mean. So you have Andreessen on one side, you have Paul Krugman on the other side, who will fight tooth and nail to explain to you why this is the best thing or the biggest joke that's ever hit, civilization. So it is pretty interesting. As a firm, we actually have had a lot of discussions about this. So first and foremost is kind of a gating question we don't typically ask, because like these guys, opportunistically, great teams, big markets, the it factor, solving a big problem, like, we'll make that investment. Bitcoin, there was kind of that fundamental question first and foremost, which is, do we want to be involved in this? What is it, and do we want to be involved in it? For people that don't know what Bitcoin is, it's, for lack of a better term, it's a cryptocurrency. It was created or formed either by one person or many people. It's part of the mystique about it, back in 2009. And what it ultimately allows a person to do, or a purchase to happen, is it basically authenticates that a transaction, no different than cash, through this general ledger system, basically authenticates and guarantees that what you think just happened. So I'm probably not doing a great job explaining this, but I'm also not a computer science major, so I just see the grins that computer science majors give me, and I sort of get it. If we were standing together and I walked up to you and you wanted to sell me something and I hand you a $5 bill, there's no question about whether or not I just handed you a $5 bill. You don't care who I am. You don't need to know who I am. You don't have to, there's no trust. The system itself is inherently trustworthy because you know what a $5 bill looks like, you know what I just handed you, you hand me the good and we go on our way. Basically, Bitcoin replicates that transaction online. And people talk about it in the sense of currency today. It actually is so much more than just currency, what you can do with this ledger. Titles for real estate, stock ledgers. The fact of the matter is, we invest in companies, we still get paper stock sent to us once we invest in that company,
You don't have to if you're represented by Orrick.
all right, well, we'll work on that. And Barry Silver would say the same thing. But but in general, 9 out of 10 deals we do, we're still getting paper stock sent to us, and all these things can be solved by the computer science behind Bitcoin. So will we invest in Bitcoin companies? We haven't to date. I think as a firm, I've personally bought a bunch of Bitcoins, and we'll see how that works out. TBD, it's been a rough week. We as a firm, I think, have gotten to a place where we think this could be really important. We could be absolutely wrong, but if particularly on the early stage side, if a couple of deals of fund are really what changes the outcomes, we have a bunch of things that don't work out, some things are kind of middle outcomes, and you hope for 2 or 3 home runs, and that's the venture capital model. To not place any bets over the span of the next 3 to 5 years may be hard as it relates to Bitcoin. That said, once we got over sort of the initial question, should we be thinking about Bitcoin, and the answer again is yes, we still come back to the fundamental things we look for in any business, which is great teams solving a big problem with an it. And that has been more challenging in Bitcoin. I think the first generation Bitcoiners, not to offend anyone in this room, it was a little bit of a mixed bag. You really do have these libertarians who are screaming, F the government, that's what this is about. Also building businesses that are in early days got traction. That's probably not the people we're going to invest in. But I would say over the last 12 to 18 months, you are seeing a lot more established, serious entrepreneurs give Bitcoin a look. So just to name off a few, Coinbase out on the West Coast, BitPay, Orrick Client, BitPay down in Atlanta, Chris Larson and Ripple here in New York. These are some of the companies that are starting to rise to the top as really credible people who
Jeremy Allaire, Circle.
All right, Circle. I apologize. There are definitely more. So I'm not claiming to name them all, just a couple. But what you are seeing is this next generation trying to really build out the infrastructure, and again, there's still a lot to be, there's a lot to be solved. Where the government comes down on this is going to be interesting. Again, people talk about, well, Bitcoin is not going to work because it's not regulated. It's like the currency itself doesn't have to be regulated. The mechanisms in and out of the currency absolutely are going to be regulated. And so having the government set the ground rules to then know, the rules by which everyone has to play by, I think will go a long way in helping the ecosystem. But again, it's so interesting because you'll sit with people, I'll start saying this and they'll say, you're an idiot. This thing is going to blow up in the next 3 months, if not before then. So what are you talking about? And other people will say, this is the internet 25 years ago, and for people who don't see that, they're just missing the boat. So we'll see what happens.
David, can I pick on you for a second as the moderator? I'm going to pick on the question of trends for entrepreneurs, because I think that for investors to be thinking about trends, we're making investments on long-term horizons and we're building portfolios. I think if you're an entrepreneur, I wouldn't get, in my opinion, too hung up about what the trends are, because I think I'm sure you guys as well, have seen a number of business plans where people slap big data on it. And then next month they're slapping whatever the buzzword is. And at the end of the day, actually it's a negative signal for the investor, because at the end of the day, we can see through that. I remember I built a company in a very sexy category, dentistry, in 2004. Yeah, see this? They're only slightly yellow. We tried everything to not categorize it as a dental company. And I think until we finally embraced what we were and played our own game, did people say, the few contrarian investors who finally got faith, including Bain Capital, ended up being a really great company. But I think there's such a temptation to want to frame it the way investors want to hear it. And I think the other thing you have to remember is some of the best companies were contrarian, right? We're in the time when everyone hated e-commerce, was an e-commerce built in that era, right? When everyone was against the .coms, that was the time to build a web company. And a lot of great companies have been started in those moments. So I'm only picking on the fact that I think as an entrepreneur, if you spend a lot of time thinking about what investors are or are not investing in, you're spending your time on potentially the wrong thing.
And I just have one thing real quick, and I'm not going to talk about Bitcoin anymore. One of the things I think universally across investors, you're going to hear this great team concept. And I think we'll all agree that outweighs, big marketing, great team are the two things that outweigh all else, forget about trends. And as an entrepreneur, it's kind of a weird thing to hear because you're obviously a great entrepreneur with a great team, and so what the hell are these guys talking about, right, is what you start to think about. And to this point about trends or what you go after, one thing you can say, you know, sometimes it's not quantifiable, but one thing you can say is having consistency or understanding where an entrepreneur came from and where they're going is very helpful. So Brontis maybe actually be a weird example because you weren't doing anything in dentistry, but there are things about how you built a business model and how you thought about leveraging the IP to go to market that would make sense from an entrepreneur's perspective. So
I also had teeth,
yeah,
which made me uniquely qualified.
Yes. Yeah, forgot about that. But so from an entrepreneur's perspective, forgetting about trends, being able to credibly say, I'm going to go build this business, and this is why I'm in a better position than anyone else in the world to go do it, is really important. And thinking about that story, crafting that story, and then in some ways molding the things you do or the opportunities you find most interesting, having that connection I think is important.
I'll add to that. So a guy comes in named Slava, 2010, about May 2010, and he says, Eliot, and we were all there, he says, crowdfunding. Like, sounds like communism. What's crowdfunding? He says, so you put up a campaign and people give you money. Like, for what? And goes, a perk. I'm like, that sounds like complete BS, man, I'm not gonna lie. Do you have any evidence that this is working right now? He says, I have $10,000 a month going through this thing I built called Indiegogo. And I'm waiting to find the right investors. And he had been trying to raise money for 2 years. No success. Funded it himself, hit the wall, got up, did it again. And his pitch was really simple. He had this burning conviction that this was going to become, that this was a tidal wave, that nobody else could see but a select few, that had been waiting with binoculars on the beach, just keeping an eye out for it. And we're really bad at guessing as a seed fund. I'm talking for BOLDstart here. I like to think that we're really, really good at extrapolating, because he came back in 3 weeks and he had $45,000 a month on a run rate, and then 75. And over the course of 5 weeks, man, I mean, this thing just went, and we're like, yep, something's going on there, right? And I think, I mean, I don't know his latest numbers, I haven't talked to him, but it is a lot more than he had then. And he was in front of the right tidal wave, well prepared. So if you've got that conviction, to your point, and to all, I mean, it's not about what's hot right now, it's about what's hot like 2 years from now. You know, where are you getting positioned? So when that set comes in, for anybody that surfs here, you gotta sit there and wait for like 3-4 waves to come at you, and you gotta pick that wave, you gotta get up at the right time, and you gotta stay on that board, right? So that's what we're looking to see. It's not, you know, do you have big data? So.
Yeah, no, all great points. And I think, in particular, one great takeaway for the entrepreneurs here, and I think most of the folks in the audience are, team and market, and certainly team and market trumps trends, to use a very alliterative phrase, if you have one takeaway. But I would say, why do we talk about what's hot, what's not, right? I think part of it is, in your initial comments, was like very informative. You know, there might have been a time when we'd have done, you know, e-commerce, you know, very early with just a team and a deck. And you know, so to me, that's a trend. That was like, if you're someone who's passionate about doing that business here, you can't change your stripes. You might add a slide about what data you're collecting or whatever, and then that might look a little bit cynical. And I think what people are hearing if they're listening is that, you know, investors look through that kind of cynicism, right? They want you to genuinely be what you are. And you may be in or out of favor, but I think events like these give people an idea of, you know, are they ahead of a tide, or are they in sync with sort of investor sentiment? So I think that's helpful. It doesn't necessarily, the data doesn't tell you how to extrapolate. You know, you can't always, you don't know that you can change what you are, you know, to suit kind of, you know, again, trends by their nature are changing over time, right? And so they're ephemeral. I promised we would invite questions if anybody has any. Certainly now would be a great time. Sure. I think you were first. You got one?
Ladies first.
Sure.
Sure. Okay. I have a question for Eliot. Indiegogo.
relatively, I think, in a way, easy to copy. What makes it?
Yeah, I'm just going to repeat this for people. So this is directed to Eliot, and apropos of Indiegogo, it seems by its definition pretty easy to copy what made Indiegogo special in light of that.
I think first mover advantage was a big one. I think Kickstarter was out before them, but they really moved early. There really wasn't a moat. They just grew really fast. And I think that the industry got big enough, fast enough, where it didn't really matter if you had a moat, right? It was just a land grab. It was like everybody heading west with the wagons. You know, there is gold in California, and we're heading out there. And you saw a lot of companies come into the market about 18 months, and now look at it. I mean, it's like an industry now, which is kind of wild if you think about it, because it wasn't here like 5 years ago. So if you're in a market that you see growing that fast, I'd say that a defensible position isn't as important as structuring it like Slava did, where, remember, I said, so what's the difference between you and Kickstarter? He said, well, they don't give you your money if you don't hit the target. I said, yeah, that sucks. He says, I'll give you the money, I'm just going to charge you more for it. I like that. That was cool. I mean, it was just an interesting way to think about the business problem. It wasn't the right answer, it wasn't the wrong answer, but he was genuinely curious about how that would work out, right? And he also built, I think, Indiegogo to be more social, so he leveraged the graph, which back in those days was the biggest buzzword you could imagine. But I got that. It was relevant at this point. So it was a low moat.
Just to jump in there, so I think it's a super interesting question, and it's something we think about a lot, is sort of, why is this defensible? Which is also sort of the same way as the same kind of thinking of, okay, your pitch makes perfect sense at scale, but how do you get to scale? And so I think in a way that's why a lot of us are here, because so some things have real IP or real tech and just no one else can build it, but for the most part it's about execution. And so we're here because people need to go faster. They need to build teams really fast. They need to get out ahead of people. They need to build a brand. And at some point, they have enough of a functioning marketplace or network effects, and then it is defensible. And that's why we're here, because otherwise you'd sort of slog through it. But instead, you need to raise an obscene amount of money. You need to spend more than you're making, and then quickly gain these network effects. So it is defensible. So we think about that a lot.
So just really quickly, because this is like a personal passion of mine, Indiegogo is a marketplace. Adam kind of used some of the words, and Eliot did too. But as a result, it's possible that there can be like one or two or maybe three players, but like it becomes very, very defensible once you sort of aggregate supply and demand. So like they're not selling software. I'm happy to talk to you about it afterwards, but it's important.
I changed, but it's a good answer.
So just broadly speaking, across the five of you, without getting too esoteric, what actually motivates the five of you to spend your time on investing in entrepreneurs, startup companies, teams, new ideas? And Adam, you briefly touched on that before, but like individually, is there something that separates the two of you that actually gets you up in the morning to go, right, this is fucking brilliant, this is what I'm going to do?
I'm happy to go. So that's right, you started. So I think the one part of your question that's really important to focus on, I think for all of us, is why do we like being investors specifically? Because I think there are a lot of ways that you can be exposed to technology and startups. You could work at Orrick, you could be work at a place like IDEO, you could be a consultant. There's so many ways you could do it. And I'm just as motivated by the next person, and hopefully more in a lot of cases, to be addicted to sort of the newness and all that, the venture space. I really like having skin in the game. I really like the tension of the decision. It's really scary to make these decisions, but I think after you do it, to sort of realize what you've done and know that the only way you make it in this industry is if you work your ass off for the companies that you sign up for and sort of contribute. And sometimes you make bad decisions and you got to sort of figure out how to deal with that. But to me, I'm motivated by sort of being a partner of the companies that I'm with and having something at stake. So
this will also be a little bit different by fund, but so we're a little bit later stage. We're about $700 million fund, and out of this fund we'll probably make about 30 investments. We have 9 managing directors, so each one's only going to make 3 or 4 per fund. We're very active with our portfolio companies once we make them. So I love the upfront part. I love meeting with new entrepreneurs every day. It keeps it exciting. You see unbelievable things in both directions, and you just can't imagine. But once we invest, a little bit hokey, but having the chance to work with a couple of companies very closely as they're doing what they're doing, which in many cases is hopefully evolutionizing or revolutionizing an industry, it's pretty cool. And every once in a while, when it really works out, to be a part of that ride, I think is great. Now, you could probably say the same thing as an entrepreneur. I tried that in college; it didn't work very well for me. So, but you get a lot of that exposure by working closely with the portfolio companies, which is always pretty interesting. So.
I would just one more comment, or maybe a slight wrinkle on, or slight different angle on the question. I think we liken our business a lot to speed dating. Like, you get to meet all these people really quickly and make a decision. And I think what that says is it's the relationship and the connection to the entrepreneur with investors key. Like, there's certain investors who are just inclined to do a certain kind of deal versus another. It's just a taste and preference. We sometimes talk about this distinction between Moneyball on one side and Blink on the other, if you guys have read those books. Moneyball being highly analytical, using stats to make decisions, and we try to do that. And then Blink sort of being instinctual. I think the earlier stage, you guys may agree or disagree, but I think the more Blink it is, the more instinctual it is, which comes down to relationship and the kind of human element. I think you can get more analytical as you get further. There's more metrics to analyze. But I think as an entrepreneur, you should sort of know that going in. Like, I'm trying to forge, I do think about, like someone told it to me, it's like the airport test. Like, if you got snowed in at O'Hare, with this entrepreneur, would that be a good thing, or would you rip your hair out? I do think about that before investments, because the likelihood of that is low. But I want to know that this is someone I want to be in the trenches with, whatever situation confronts us.
I don't think about that.
I'll add one. So, I get up in the morning and I want to meet the startup that I can get really excited about. So it's the founder who walks in and says, I've got a question that I just can't stand it and I need to answer it. So here's what I've got, and would love to know what you think, and I'm trying to find the right question to be asking about this experiment. So an example would be, hey, Eliot, do you have 2 phones? Yeah, I got a work phone and a personal phone. You want one? Because I'm kind of putting this thing together, and I'm thinking that corporations are gonna have all these phones coming into their offices, and they're handing out BlackBerries and got everybody walking around with 2 phones. That just can't last. So I'm trying to figure out how we solve that problem. That's a cool pitch. That's not walking in going, I have all the answers. That's like the worst pitch. It's when an entrepreneur just has a bunch of answers with no questions. So, I'm a curious guy, so that's kind of what gets me up.
I was curious to ask, with the New York City focused investors, obviously media and advertising technology is so much a part of New York. Is that a category that is we're seeing the maturity of a lot of companies going public? Are you at seed stage looking for the next growth within that, or is that a wave that went by and there's other waves to pursue?
Man, my thought on that would be that mobile is the next wave of that, and a lot of that's happening here, and I think we see a lot of it. Not my place to say that, but it's one of the things we've observed.
That's a good comment.
I'll take it and half answer it. So I think ad tech personally is one of the sort of specialized spaces that you have to know really well to be a good investor. So we tend to avoid it because I just don't think we're smart enough about it. None of us are ad tech specialists here. Having said that, there are versions of it that aren't sort of like the hardcore technology layer, but are the more social layer that make a lot of sense. And I'll sort of queue up the portfolio company that we invited to pitch afterwards, a company called Niche. And so what they're thinking about is how you use sort of the new definition of the social internet and new content creators, and where most eyeballs are actually going, and how you engage brands and create more dollars, bigger audience, more engagement. And so on a larger basis, it actually gets to a trend that that we've been thinking about. So the fat head has sort of gone away. And what we've seen is that if you think about like the normal curve, the fat tails, so we have kurtosis and the fat tails are getting thicker. And what it means is that, you know, everyone used to watch the same primetime TV show. That's not true anymore. Some people watch it, and a lot of other millions of people are watching YouTube, or they're on Vine. And so the ad dollars that are spent on TV are, you know, going to go away, and instead you care about what a 12-year-old girl is talking about on Vine. And so
you care about it.
I care deeply, and maybe actually, as a new company, you need to pay her dad because you can't pay her, and Rob will talk about that. But eyeballs are shifting, and so I think that's super interesting, and you see that loss of the fat head across so many verticals, and I think that's like a super interesting mega theme that's really investable.
I would just agree. I mean, we remain long on ad tech. I think you know, we've got 3 portfolio companies, actually probably more, but in terms of revenue production, are probably among the highest in the portfolio. I think the reason we remain the tailwinds that you're talking about, migration from TV online, but just in talking to my portfolio companies, they're constantly talking about, oh, these Facebook ads are really performing. You know, now we know who's down, you know, who's using Spotify and when, and you know, all sorts of behavior stuff that they didn't know before. And oh, by the way, it's working on mobile, and we're getting, you know, our CPMs. So like, I think we just see it over and over again. You know, I think one of the challenges as an investor in ad tech is that a lot of our companies start competing with each other. And so all of a sudden they start with a proprietary technology to give you ad viewability, but they're actually trading inventory too, just like the other portfolio company. And the other portfolio company now has a viewability product. And like, so that's made it a little more challenging, because we've seen the kind of full stack is sort of what you need once you have a customer in order to keep that customer. So, but again, at a meta level, for sure, like I think there's just gonna be more and more of this stuff, whether it's mobile or new tech.
How many companies, though, do you see that have start with 65 billion in TV advertising is going to move online, and I'm going to get, you know, 1% of that? I mean, that seems like every company that, you know, it doesn't add up.
Yeah, I mean, I think you get those high-level numbers, and you kind of scoff at that. But I think, to Adam's point, if a company really knows their stuff, they're able to dissect the market actually quite wisely. And I think everybody knows the big number. Like I think one of the quips that I often that I believe in, and my partners and I sometimes say to each other is, you know, eyes way up on the sky, feet firmly planted on the ground. The idea is like you can tell that story, and everybody knows like one day this, you know, gazillions of dollars in TV are shifting now, but like it's fun. But right now I'm going after this $3 billion market, and here's why I'm focused on this slice. Like that's the feet firmly planted on the ground that I actually like to hear. Because I think one of you said, it's like, I can get the big vision, but like, how do I get there? And I think the good entrepreneurs, particularly in ad tech, know exactly at least how to get, you know, part of the way there.
Yeah, I'll make one other quick point. So I don't focus on ad tech either, but I do fintech and fin services in New York. I think ecosystems, in a lot of ways, we made the comment about law firms and accounting firms. It's also the big companies that exist in the ecosystems, right? So New York has probably 2 major advantages in and around ad tech and media agencies, and then fintech and fin services. And to Micah's point about this nuance, really understanding what's happening in the 65 billion that's moving from television to online or mobile, and how it's actually going to work, probably means at some point you felt the pain, or you worked at a firm that understood the problem. And so in New York, if you have a lot of great ad tech companies and you have the largest publishers in the world based here, being sort of close to them starts to create an ecosystem where people are leaving those companies to start, and you know, newer companies, entrepreneurs, to go out and solve those problems. They have access to those publishers to, as they're building prototypes or MVPs, to think about what they really need and how they're going to address the issue. You know, as they start to scale, there's a boatload of customers here specifically for ad tech. And ultimately, as you think about acquisitions, there are lots of, you know, acquisitive companies in New York who, again, ad tech, fintech, whatever you want to say. It's the same reason that, you know, Boston's had its ups and downs, but healthcare in Boston will probably remain large, and infrastructure software in Boston will be important because EMC is there. And so there are patterns you'll find in terms of what's most interesting. That doesn't mean you can't build any company anywhere, and we see great companies in Iowa. But if you're in New York and you're building a company, and again, back to that whole consistent story, it's most likely, or it's a high probability, people are coming from either the ad tech media world or they're coming from fintech, fin services, which make them uniquely positioned to go out and answer, these tougher questions about what comes next. So.
Re-queue up the first demo. Rob Fishman, CEO of a company that's called Niche, or Niche, depending on how you pronounce that word. I'm a niche guy. So as I was saying, he's thinking about the newest and sort of biggest trend in advertising. I guess I call it social advertising. Let's see what sort of 2 or 3 word term he calls it. But he's working with big brands and smaller startups and helping them get tremendous engagement. And he's the reason why a couple weeks ago a sleeper zombie movie from Netflix that is like a C-level movie that was thrown to him was the #1 movie of the week, because again he got 12-year-old Vine stars to Vine about it. So without further ado, here's Rob.
Have a presentation. Hi, I'm Rob. I'm the aforementioned payer of the 12-year-old girl's fathers. It's good work if you can get it. Where do I put this? Is that going to mess up anything? Oh yeah, short screen. Probably be helpful if I could get to the USB. I don't know how to use these PCs. Choice. What do you do in the building? She's on the way. Okay. Here, it's probably on the desktop, right? Oh, here. Open folder to view items. Niche presentation. What do you know? How do I make this full screen?
F5.
F5. Okay, good. There's the first slide. Thank you all for having me. I'm really happy to be here. My name's Rob Fishman. I was very pleased to hear the panel and their collective wisdom and hear how kind of bullish they are in this industry of ours, particularly my friend Spencer, who certainly does see the world through rosy-colored glasses. Adam dared me to make a joke about your glasses.
That was good.
Thank you. So I'm here to talk about my company Niche, which is not a balloon maker, even though it looks like it is. We do some cool stuff, which I want to tell you about. But first, I was just going to talk really briefly about my last gig, which a few ago, I worked at a company called the Huffington Post, which I hope some of you read and maybe even still read now that we're part of AOL. The Huffington Post was called a disruptor, and it's good to be a disruptive force in the space, as they say. And I think better to be a disruptor than the disrupted. That's why, say, like the New York Times used to call Ariana the queen of aggregation, and they referred to her namesake, our company, as oxpeckers who ride on the back of pachyderms feeding off ticks, which was true and very charming. But I think what's interesting about that, and what people maybe didn't realize at the time or even now, and I was the social media editor there, is as we were kind of looking over our backs and scoffing at the New York Times, was how much we ourselves were being disrupted, and looming ahead were these kind of growing mountains, which were Facebook and Twitter and Tumblr, which if the Huffington Post posed a sort of economic threat to the New York Times, then these companies posed an existential threat to all of us, which is instead of central distributors like the Times or CBS and whose building we're in, instead of them delivering information to the masses, which is us, they posited this model where you shared information with me and I shared with you and me with Spencer, and we were all, among in between. And that in a way was much more challenging, and especially for advertisers, because it's like, where do you put money if there aren't these big central hubs? So I'm happy to announce that the pendulum has swung a little bit back in the other direction, and that's what we're doing with Niche. What I'm perhaps less happy to announce is that it looks like this. And this is Nash Greer taking a selfie. He's a 16-year-old kid. He's from North Carolina. He's the biggest creator on Niche, which I'll tell you about. He has close to 11 million followers by himself. 6 months ago, I think he had 0 followers. He started out on Vine, 5 million. Now he's grown an Instagram audience in 3 months of 2.5 million people. So he's kind of like the new New York Times, just as credible, just as a... No, but actually, if you look at just Instagram alone, this is BuzzFeed, a new media organization with 159,000 Instagram followers. followers. The New York Times fashion page, I don't believe the New York Times itself has a page, which is 464,000, and Nash has 2.5 million, which is kind of staggering. But when you guys were talking about controlling the TV audience, like, they don't even care about the TV audience. They have their own audience, which is massive and huge and bigger than any kind of central publication. The problem, which is a term that I think VCs and kind of startup founders like to talk about, is that, like, similar to Nash, there are probably 10,000 of these people: YouTube vloggers, Tumblr bloggers, Instagram photographers, Vine stars, WordPress scribes. And they're all over the place, and their fans are rabid and hyper engaged. They like everything they do. These guys say jump, and their fans say how high, and then they take a picture of how high they've jumped and share it. So there are a lot of people kind of competing for these people's attention and affection. There are multi-channel networks like Fullscreen and Machinima and Makers who are interested in their YouTube side. There are traditional talent agencies like UTA and WME who are interested in, hey, how do I turn this guy into a movie star? Sad part is a lot of them can't act. They just take good pictures of their face. Then there are new mobile agencies who are interested in, hey, I want your Vine rights or your YouTube rights. And then there are the platforms themselves with whom these people sort of enjoy uneasy, weird relationships. So that's why we were working on Niche, which is sort of if LinkedIn is to business people and Behance is to illustrators and Dribble is to designers, we want to be sort of the hub for all of these emerging creators who we believe represent the next layer of emerging mindset and together encompass a bigger audience than really anything else in the world. We've been around for 6 months, but we opened the site at the end of November, so not very long. We've had about 2,000 creators sign up with us, but they control 300 million eyeballs. And every day we're seeing 100, every week we're seeing a few hundred people sign up. We're not necessarily looking for the whole world to sign up, but if you guys want to, you're welcome to. We're looking for the people who have sort of significant mind share in the beginning. This is an early peek at what the redesign site's going to look like. It's kind of based around a leaderboard. You see our old friend Nash there at the top with his 10.8 million followers as of today. And this was from a few days ago. So basically, what do we build for creators? Why do they come to us? First, a unified profile of their account. So if the Huffington Post aggregated the New York Times and Facebook aggregated the Huffington Post, we now aggregate Facebook. That means we have your Facebook, your Twitter, your Tumblr, your YouTube all in one place. We've also built cross-platform analytics for these people so that they can see how they're growing and how they're thriving, which of my posts gets the most likes, which gets the most comments, and monetization opportunities, which I'll touch on briefly. We help them intelligently work with brands. So, for brands, and this is the dark and lucrative side of our business, we work with brands and studios and startups and agencies. We offer them their own analytics for social media so they can see how they're trending on these new platforms. We help them search this kind of wide and disparate universe with a comprehensive directory. And we offer them campaign management tools because what we're doing, and here are some of the brands we work with, is essentially helping them to advertise on these new channels. So if you're, The Gap, will run a fashion show with you with the top Vine stars in the world. If you're Relativity Pictures, and a movie studio will bring Viners to the red carpet to take kind of awesome Vines and Instagrams on the red carpet with your movie stars. I promise you the kids will be more excited about seeing the Vine stars than the actual movie stars, which we've seen again and again. And it can give you kind of 100 examples, but we're offering a mix of sort of software and services to help the big brands and big agencies essentially make sense of these emerging platforms, which people really don't have much of a handle on yet. So anyway, I know they want to do questions. If you're a person who has a consumer-facing company or knows one or invests in one, interested in talking to you, and if you're an aspiring Vine star, I urge you to get filming. That's all.
If anybody has any questions, you guys can ask them.
Really simple one. How do you find you on the web? I can't find it at all.
Niche.co.co. .com's a school website, but we're going to take them down. Not schools. Yeah.
Someone like Greer, who are his followers? What's the profile?
Well, that's the interesting thing, and people ask, how did they get so many followers, and who are they? They're all different. I mean, Nash Greer's followers are predictably a lot of teenagers, particularly teenage girls. But we work with tons of Instagram photographers who you and I probably follow, or Tumblr bloggers. The audience is wide and different, and one of the things we're doing is digging deep into those demographics and hopefully being the only people out there who can tell you who are Nash Greer's followers versus that other guy's followers, and so advertisers can effectively work with them. Yep.
So this is like Hootsuite, but with an ad network, more or less?
Hootsuite with what?
With an ad network?
A little bit, yeah. I mean, none of these guys use Hootsuite or really anything, so we're sort of building tools with them specifically in mind. Yeah, there's a bunch of kind of different pieces, but I'd say that's two of them. Yep.
Your follower to creator ratio is pretty large.
large? How do you find your creators?
Well, 2 of the top Viners in the world work for us full-time, which has been fun, and we've just kind of gotten to know these communities. They're amazingly close and cliquey, and we're constantly branching into new ones. But as I said, we don't need 1 million people to sign up for the site. We're looking for sort of the 50,000 people in the world who have the largest audiences. And it's not just about follower numbers. We're looking for people who have serious engagement as well. So,
okay, Rob, that's good stuff.
Yep.
We're very much appreciated.
Thank you.
Micah, you were in?
Sure. I want to introduce Gina Bartazzi. Gina's a longtime friend. We met around the time she stole my babysitter. No, I'm just kidding. Sort of. Gina, what I love about Gina's business is she's solving a problem that's a real world problem that I think many people, especially people in my own family, can relate to. This sort of view that we're not going to stay 20, 25 years old our whole lives, and infertility is actually a problem that's going to afflict more and more Americans and more people that wait to have children. So, and I think the broader opportunity is to provide transparency into something and information that typically was sort of kept to really expensive doctors and so forth. So, without further ado, Gina.
Great, thank you, Micah. Gina Bartazzi, FertilityAuthority.com. So I wanted to tie into tonight's discussions on what's hot and what's not. What's hot? Somebody mentioned it earlier, but it's porn. It's sex. That's what's hot. And anything with strong barriers to entry. Wesley Chan, who was formerly of Google Ventures, he's actually still there. He just moved to an EIR position there. He said in the future, people will only have sex for fun and not to procreate. And what did he mean by that? We'll get to that. Additionally, last Wednesday's paper on the front page of the New York Times was a story, hopefully many of you saw it, on ethics questions arise around genetic selection of selecting embryos. So what we do at Fertility Authority is the huge growing interest in genetic screening amongst a fertile population. When I first met Micah about 5 years ago, we were an IVF site monetized through advertising and subscription revenue. And we were focused on this IVF population. And what Micah did was say, Gina, get me $1 billion business. And in the IVF world, I just told our board this in December, there are not enough wealthy people going through IVF treatment. And IVF treatment does affect 1 of every 6 couples. So look around this room and count 6 people. And 1 of the 6, now they have to be couples, so presumably if some of these guys are men, they're probably not trying to conceive. But 1 of every 6 couples is going through IVF treatment. The challenge for IVF is it's $65,000 cash from start to conception. And it's all cash. There's very little managed care or health insurance in the elective healthcare space of IVF. So when Micah said, get me to $1 billion business, we really struggled with that until just recently. So we are tackling a new population, which is the fertile population, not just the infertile population, by what Wesley Chan was talking about, and that is selecting embryos, only healthy embryos. So you could essentially remove any kind of genetic abnormalities from human nature. So cystic fibrosis, Down syndrome, they test for all of that. They test for Tay-Sachs disease. A lot of geneticists will tell you they're 5 years away from testing from autism biomarkers. So imagine that you could test for autism in the next 5 years. The only way you can do that is to test an embryo, to biopsy an embryo before it is transplanted into the female. If you find out after the case, then you may elect to terminate, and that's a very difficult decision. So more and more people are doing genetic testing ahead of transfer, which is through IVF. What's not? Drugs. If you saw that Wednesday's paper from the New York Times, that Philip Seymour Hoffman was on the top of that screen. So what's hot is sex, and what's not is drugs, and anything that is easily replicated. So on the first slide, we talked about what's hot, sex, and anything that is not easily replicated. It's interesting because the first company was called Niche. We believe in niche markets. We believe that niche markets have to be enormous. They have to be able to hit that $1 billion mark. What's not hot, some of these guys mentioned, but e-commerce has kind of fallen out of favor, and certainly the flash sale sites of e-commerce. My marketing director put this together, unbeknownst to me, but Ace of Hearts, Ace of Spades, and Summer Jam are all names for heroin. Anybody know that? Anyway, so it's hard to replicate. You guys talked about building a moat. So build something that's unique, niche, in demand, and not easily replicated. What else is hot? Is hot. Sheryl Sandberg is hot. Lean in. Actually, Erin Kalin, who was the former CFO of Lehman Brothers, said, no thanks, I'm leaning out. Because she's 47 years old, she put her career ahead of having children, and so she's having a hard time conceiving. She's been very public about that. And so what if you could have it all? As a professional female, what if you could have it all? So the billion-dollar opportunity is for young professional women to freeze their eggs. The technology now exists that the success rates with IVF with fresh eggs are the same as frozen eggs, and that technology is called vitrification. If only 1% of the 41 million American women, single American women, elect to freeze their eggs annually, that's a new $6 billion market opportunity. Yeah, so think about the 1.6 couples who are already going through IVF treatment, and then a brand new market segment for young professional women like Erin Kalin, who will just freeze their eggs. So there's another, again, a huge growing interest in the fertile population as it relates to egg freezing. The only way to do that is through IVF. So who are we? Again, we're Fertility Authority. We have 1 million monthly visitors. We have 1.12 million pages of index content. We have 365 doctors already in our network. So we started, when I first met Micah, was almost about 5 years ago. We are raising our first round of institutional money. We've raised about 1.2 million to date in angel and seed money, and that's and we're profitable. Albert Winger, who's an investor, was like, "Stop bragging about profit." But then I went to another venture conference recently, and profit was all anyone was talking about.
Don't listen to investors.
That was, that was the day of the ideally deal to Groupon. And so anyway, we think profit's important. We are ready to put our foot on the gas and spend more than we bring in now. But what we will do now that we have leverage, so we have 365 doctors in our network, it's a self-pay, cash-paying market. We will come in and almost act as a managed care operator, and we will negotiate discounts with those fertility doctors. We will sell direct to our consumer, our audience of 1 million users each month, and we'll take margin, about $4,000 for every transaction that we take. So in the future, you'll buy your IVF cycles online, you'll buy your egg freezing cycles online, and we'll make the margin between what you pay us and what we pay the fertility doctor. And that's Fertility Authority.
We're going to postpone questions for a moment just so we can hustle through. And thank you very much. I think our next one, Jordan, were you going to introduce Pado?
Yeah. Are the Pado guys here?
Yeah, he's outside.
Oh, excellent. So I'm going to let them do more of the introduction. This was actually one of our ad tech companies that a few of our Boston guys invested in. And fundamentally, what they're solving for is lots of different companies are trying to help brands figure out where to place ads, but not a ton of companies are focusing on what's the actual statements the ads should make early on, right? There are certain companies that do A/B testing once you get up and running, but what these guys have built is, not to use terms, but big data. They figured out how to think about the most effective ads you can start as far as a campaign once you launch from the actual message perspective. But I'll let these guys talk about it.
You're there. Thanks for the introduction. So, I'm in charge of product and innovation at Pado, and basically I'm just going to take you through what we do. And what we do is, what we solve is exactly this issue here. So, as explained, one of the big things that has happened up until now in digital marketing is basically solving with technology and science all the different steps that are about targeting, bidding, segmentation and those kind of things, and at the end there is always a copy, and no one has ever spent either the time or never actually try to solve this in a scientific way. So those examples here are real examples from Skype. Those are the things that open up in your Skype clients if you're still using Windows. And those are response rate going through, click-through rate going through those 4 variants. Now, if you just want to do the mental exercise of trying to find out what response goes with what copy, you can just have a go. Usually that's a difficult exercise, and that's something that any digital marketer actually does, betting in somehow like big revenues, right? So this is, and this is what corresponds to what. So this is just to give you an illustration of the huge variation. Here you see that you actually had 100% that was at stake with a few word changes in the word. The offer is exactly the same. People who are targeted are exactly the same. We didn't touch the creative, only language, right? Now, we've observed variation of up to 800%. So the worst copy you can get to the best, the difference is 800%. And this is the money you're leaving on the table if you just leave like a creative guy, go up and write your copy. You know, the guy can maybe had a bad night yesterday and is just not in good shape. The thing is that gut feeling is not the answer to that. Now, the good news is that today there is an entire technology stack that actually allows you to test very efficiently, whether it's on email or if you have a web page and you use Optimizely, Test and Target, or all the different solutions that are offered by those vendors. It's actually very, very easy to set up tests, right? Now the question is, what do you test? Okay, I mean, you can test the button being on the right and the left. You don't need to be, that's not rocket science. But when it comes to language, what is it that you put in there? Now, the interesting thing is that the number is very big and way bigger than what you think. For just a text message, 160 characters, the number of possible variations are usually around 10 million, 10 to 16 million different possible ways of saying the same thing. Obviously, when you go to a web banner or the body of an email, this grows exponentially big. Now, the good news is that the number is big, but it's finite. So you can actually approach it mathematically. If you just want to try your luck, the good way of going about it is, one, you go and you generate all the possible variations, all the possible ways of saying the same thing, and then you test them one after the other. Now, this approach actually has some issues. The first one is, if you want to go and just have people write all those possible variations, you need to hire, like, I don't know, half of New York and feed them and just have them write in there, and they're going to be spending time on that. And the second one is, there are actually not enough people on Earth for you to get any kind of statistical significance testing those millions of variations. So, okay, I've made my momentum. Where is the answer? It's all about organization. You start actually being able to tackle the issue if you organize the problem. So if we go back to this initial Skype banner, anyone who would want to work on it and go to the very best possible response rate on it should not look at it as a whole. That's a very, very wrong approach. If you look at any marketing message, and you can try the exercise on your own, you will see that actually there are what we call key components. Some of the things you have in there, some of the words, are here to trigger emotions. When they say you love it, when they say don't miss it, 2 is for 2 minutes, okay? When they say don't miss it, this is about actually conveying an emotion. When they say I like that, or click here, this is functional. This is about asking you to complete an action. If you do this first thing, you've actually solved half the problem. Because then what you have to do is go and build ontologies that will actually allow you to understand for each of those separately, what is the universe of possibilities. And you build real ontology. We use machine learning and semantic algorithms to do that, but for emotions, for call to action, for everything, we have an organization of what we call the semantical space. Organization is magical. It allows you to see the world from this thing here to actually this. When you see this, you understand how to go about it. Just to simplify it, instead of testing all the dots, you're going to test the most representative dot for each of the colors. And when you find which one is the one with the highest response, you go and you iterate. This allows you, the organization allows you to sample the space. Meaning, instead of testing 300,000 types of words expressing emotions, you're just going to test initially, for example, positive and negative. You understand which one works better. If your organization is correct, then you go and you drill down. I'm simplifying, but that's the overall idea. Now, that's still millions of combinations, even when you get there. The next thing is to use the right statistical approach. So we're hearing a lot about A/B testing. A/B testing is like, instead of taking the subway tonight, you're gonna go home with your horse. A/B testing, in order for you to get statistical significance on the A/B testing, you actually need 200 responses per variant. Now, anyone who actually is reading a lot of blogs is gonna talk to me about multivariate testing. That's taking your bicycle. Multivariate testing still requires something like 50 responses per variant. Now, if you use a method that's called experimental design, you can actually go with 4,000 responses, you can explore 1.5 million variants. This actually gets you to the absolute best message very quickly on any channel, actually any type of product and any segment of consumers. Now, I'm just going to rush very, very quickly. This does not magically apply everywhere. The first thing, it does not apply to process pages. When you're asking someone their credit card, there is not a decision to be taken. They've already taken the decision before that, just filling information. There is nothing we can do about how many people are going to enter their credit card. The other thing is, if you have this type of offer on Apple's website, where they're just giving away iPhone 5s for free, there's nothing we won't be able to do with language. Everybody's just going to go and take the offer. If there is 1% not taking it, they just don't speak English. They don't understand what's happening. So I'm just going to be very, very quick. Last one is, when you do that, you have to be very, very careful. Anything you learn actually is different whether you're looking for clicks or conversion. Typically what we call instant or delayed. The emotion triggering one are not the emotion triggering the other. I guess it's pretty obvious. If not, I tell you surprise, you can be surprised. If by doing that I want you to buy something tomorrow, chances are it won't work. And just some small snack bite, if you want to take a picture, I think that's a good picture. It gives you some information about some of the most interesting findings we've found overall on the aggregate campaigns that we've run. Typically, for example, lots of people are talking about subject line and how they need to be short to have good open rates. Just tell them that that's pure bullshit. Very bluntly, this is bullshit. And then you have, I'm not going to go into each of them, but those are general findings that we found. In the same way, like things that are require immediacy, like now, today, have a very good impact on clicks, very, very bad impact on conversion. We found, that's the last one, I promise, we found something very, very interesting. Negative emotion usually have a very, very bad impact on conversion, except in Latin America. Don't ask me why. This is the only region of the world where these get people to actually buy.
Awesome.
Awesome. Actually, negative emotion driving conversion, I would say, is I hated Bonfire of the Vanities so much, I had to finish it even though it was really thick, just so I couldn't have someone tell me that, oh, well, you didn't finish it, so you can't know how good it is. So maybe it's something along those lines. Anyway, wanted to thank our panelists tonight.
We have one more. I don't know if they're here.
Oh, do we?
Is Floyd here? Okay, maybe not.
Okay.
Okay, all right.
All right, sorry, Joyce. At any rate, I want to thank our panelists. This was great, it was informative, and it was fun. We enjoyed it. We hope to have you back on future panels. Hope to get ideas for future panels with you. And certainly, people will be around for a little while if you want to get a chance to buttonhole people and visit with them. And once again, thanks everybody for coming. Look forward to seeing you in another Total Access.